Welcome to this video on NGO Financial Reporting Essentials, designed for both senior and junior finance officers. We will cover key areas including budgeting, donor compliance, and monthly reporting for NGO programs. Financial reporting involves collecting, organizing, and presenting financial data to stakeholders. For NGOs, this is focused on accountability, compliance, and transparency in the use of donor and public funds, rather than profit. You will handle several key reports, including Budget versus Actual, or BVA, which compares planned versus actual spending. Other essential reports include the Cash Flow Report and customized donor financial reports. Here is an example of a BVA report. Notice the variance column. It is critical to spot and explain why certain line items, like transport, are over or under budget, and ensure donor rules are followed. Donor compliance is vital. Each donor sets its own rules, formats, and deadlines. Your responsibilities include tracking eligible versus ineligible costs, using the donor's chart of accounts, and submitting reports strictly on time. As a finance officer, you will use several key tools. Excel is crucial for data entry and BVA reports, while accounting systems like QuickBooks or SAP are used for coding and posting transactions. The cash book is a daily log of all cash and bank transactions, showing the opening balance, income, expenses, and the closing balance. Field offices typically prepare cash books monthly for consolidation at HQ. This is a basic cash book format. It records the date, voucher number, description, income, expenses, and, importantly, always includes a running balance to track the available funds. Key rules for cash book entries include daily updates, ensuring every transaction has a unique voucher number, and maintaining sequential dates and vouchers. Always keep backups of all supporting documents. The month-end checklist ensures all entries are complete and sequential, the opening balance is reconciled, and the physical cash count matches the closing balance. Finally, all documents must be signed and sent to HQ. Accounting is the overall process of summarizing and reporting financial transactions. Bookkeeping is the foundation. It is the physical act of recording those transactions in an organized manner. The main objectives are to maintain accurate and complete financial records and ensure every transaction is backed by proper documentation, such as receipts and invoices. This data must be ready for reporting and audit. Main tasks in accounting and bookkeeping include recording all transactions, maintaining ledgers like the general ledger and accounts payable, reconciling accounts with bank statements, and utilizing accounting software. The step-by-step process for recording transactions involves collecting supporting documents, classifying the transaction by type, recording it in the accounting system with the necessary details, and finally, filing the document properly. Debit and credit form the double entry system. Debit records value entering the business, increasing assets or expenses. Credit records value leaving the business, increasing liabilities or income. Total debits must always equal total credits. Remember the debit and credit rules. Debits increase assets and expenses, while credits increase liabilities, equity, and income or revenue. Best practices include recording transactions daily or weekly to prevent backlogs. Always double-check calculations and strictly follow the double entry system. Keep personal and business accounts entirely separate. Common mistakes to avoid are forgetting to attach receipts, recording transactions in the wrong accounts, mixing up expenses and income, and failing to regularly reconcile bank statements. Here is a practice exercise. If your NGO receives a $5,000 grant in the bank, how would you record this? Think about which accounts increase and which accounts decrease.
Financial statements are critical for NGOs. They record financial activities, provide transparency, and show accountability. Unlike businesses, NGOs use these statements to demonstrate how funds are managed to achieve their mission, not for profit. The statement of financial position or balance sheet shows the financial status at a specific date. It details assets, liabilities, and net assets, distinguishing between restricted and unrestricted funds. The statement of activities, or income and expenditure statement, reports income from sources like grants and donations and expenses over a period. This statement determines if there is a surplus or deficit. The cash flow statement tracks the movement of cash, including inflows and outflows from operating, investing, and financing activities. It is essential for managing liquidity and ensuring the ability to pay obligations. The statement of changes in fund balances shows how restricted and unrestricted fund balances have changed. This statement explains increases, decreases, and any transfers between these specific funds. Financial statements are important for building donor trust and ensuring transparency. They also support internal decision-making, facilitate planning, ensure compliance with legal requirements, and measure overall financial health.